Top Gun options traders and investors. Whiz here, primary and weekly options model portfolio manager at Top Gun Options, and seeing the futures basically flat this morning. Why? I think we're going to move sideways into the open. We have Alcoa reporting earnings today. Alcoa kicking off earnings on the 8th, unofficially kicking off earnings season. Why do I say that? A lot of people get this one wrong. You can get this right at your next cocktail party. Why is Alcoa report first? Well, Wiz, it's because of their stock symbol, AA. That would be incorrect, and you'd have to buy me a beer. It's because one of their CEOs a while ago wanted to be the first and be seen as the first to report earnings. That's why it has nothing to do with their stock symbol. So we're starting to kick off Q4 earnings season. And in my opinion, it's earnings season for the past, I'd say, year and a half have really been porridge. They haven't been too hot, haven't been too cold. And I think this time around, I think we're going to be closer to the colder side. Why? The fiscal cliff. I think a lot of businesses feared the fiscal cliff, held on to hiring, really didn't invest in CapEx, capital goods or inventory. So I don't think earnings are going to be that strong this season. And another indicator that supports that hypothesis is small business sentiment. The NFIB, National Federation of Independent Businesses, their sentiment edged up in December. Well, okay, Wiz, it's great news. Actually, it's other than that, Mrs. Lincoln, how's the play news? Why? That was their second worst reading since March of 2010. So I think what we're going to see are a lot of fiscal cliff stuff working their way into the system. And I really think the NFIB is going to get a lot worse. Why? Because as a result of the fiscal cliff quote-unquote deal or resolution, small businesses got absolutely hammered. Sub-S, small businesses, a lot of businesses that elect to file a sub-S are going to get just devastated. Okay, so I think as this whole fiscal cliff resolution works itself into our economy, it's going to be a lot worse than we expected. And stand by for what? End of February and our debt ceiling. So legally, we crashed through our debt ceiling on January 1st, but Timmy Geithner and Treasury can use some accounting gimmicks, let's call it. Of course, they can do whatever the hell they want in Washington, but they are using some gimmicks to keep us kind of around our debt ceiling for about 2 months. That's about as long as they can pull a rabbit out of a hat, and then we're officially in trouble. And guess what's going on now? Well, Nancy Pelosi says we're going after another trillion in tax raises. Senator Mitch McConnell on Meet the Press on Sunday said we're done. Don't even mention the T word, taxes. We're done. It's all about spending cuts the next time the president comes to us, and don't even think about it. So if you remember, as a student of history of the markets, hopefully you remember what happened in August of 2011, the last time we had a fiscal cliff debate here. S&P went from 1330s, 1340s all the way down to about 1122. Just a collapse out of that, and then a resultant 150% spike in VIX in the volatility index. So I expect it to be just as bad. I expect a lot more hand wringing. The president hasn't had to negotiate one day in his life. The guy's been given everything on a silver platter. The Republicans folded like a cheap suit with the fiscal cliff debate. I don't think they're going to do it this time. I really don't, and that's going to be bad for the markets. It's going to be great for us as options traders. So I'm loving trading this market. Consumer credit coming up at 3 this afternoon. That'll be an interesting one to watch. How's the consumer doing? How much are we putting on the plastic? How's consumer spending and confidence? So we'll see. We're starting to get mixed signals out of that. It really wasn't that merry of a Christmas out of people. So we'll see how consumer spending was in December. Not too much on the radar on Wednesday. Thursday, obviously, we always have our weekly unemployment claims and wholesale inventories. That'll be interesting. Why traders care? It's a signal of future business spending because companies are more likely to purchase goods once they've depleted inventories. So it'll be interesting to see how wholesale inventories made out in December, and then on Friday some trade balance and import price data. Okay, so got to run. Going to be watching Alcoa today. It really doesn't drive or set the tone for earnings season. It's just an interesting one to watch. So keep an eye out for Alcoa. But as we start getting into earnings season in earnest, so to speak, we'll really get a flavor for what's going on and which way this market's going to go. However, we, just like Marty Feldman, we have one eyeball down to the debt ceiling and what's going to happen there, and have a live trading session here at 9 a.m. with my Top Gun Options primary traders. We're going to be putting on some trades just as we did for the fiscal cliff. We put on a bullish double vertical on the SPX and a bearish double vertical on the VIX. The SPX double vertical, the day the fiscal cliff got resolved, was up 1,100% in one day. That's what a double vertical can do for you. If you don't know what a double vertical is, I strongly recommend you check out what we're doing here at Top Gun Options. You can go to topgunoptions.com, hover over TA/LTB combo, or just go to topgunoptions.com/TA-LTB, and you can take a 2-week test flight and check out what we do here at Top Gun Options, because I would not be trading this market solo, folks. I'd be joining up with a professional wingman. Watch how we do it. Watch how our vol arbitrage traders do it, and learn, okay? Because trading's combat. There's going to be winner and there's going to be a loser. And during the fiscal cliff resolution, we absolutely crushed it. I plan on crushing it during the debt ceiling debate. And oh, by the way, we also have sequestration still coming up as well. So we're not even close to being out of the woods. And we love being in the woods as options traders, because volatility equals higher premiums, wider swings, and potentially higher profits for us as options traders. Okay, got to run, got to get ready for my live trade brief. I'll talk to you guys tomorrow on our Wednesday sit rep. See ya.